All right. All right. How's everyone doing? This is Hala Pablo. Thank you for tuning in. Let's do let's do a quick Bitcoin little analysis here, technical analysis. So I know this looks all cluttered and complicated, but it's really not. I want to explain this to you. Basically, what I have here is Bitcoin on a logarithmic with two macro buying climaxes, and a third where it is presumed it will go. Okay. So, and this is all according to Elliott Wave and Wyckoff and Trend, the governance of Trend. So, anyway, we as you can see, we have this macro trend line resistance on top of this ascending channel. We have the buying climaxes. This first one was from back in December of 17, and where we peaked out at 19.2. This is approximate now. And then we had the sell-off, an 84% sell-off, retracement that lasted 371 days, and that brought us down to the macro trend support line here. And then we had, you see this sub-Elliott wave coming back up. Now this is the counter rally. This is the counter trend here on the macro. And this one peaked out at 331%. It took 158 days, and it went up to channel midpoint. And then we had its ABC correction from here. Now this ABC correction ended with the COVID lows. So this was in March of 20. And then this was a 72% sell-off. And all the way down to the COVID lows was 72%. But if it just had taken it down to the macro trend support line, that would have been a 52% macro support in 245 days. It took 245 days for this to transpire. And then we had a whole new macro bull cycle. And here's the Elliott wave, the 1, the 2, the 3, the 4, and the 5. And then that culminated in the buying climax that we had. We're topped out at 68.3. And that was in March of 21. Okay. And that took 594 days. And that was a 1,600% pump. That was a 1,600% markup. Okay. And then we had the ABC sell-off from there. And it brought us back down to the macro trend support line, 389 days, a little over a year, with a 77% selling climax. And then here we have the start of a new cycle. Now this was back in December of 22, and then we draw another subwave here, the 1, the 2. I would say this is a 3, the 4, and then the 5. The 5 is perhaps a bit extended, but not extended more than the 3 wave, so we're well within Elliott wave theory here. And this again topped out at channel midpoint, like it did back in July of 19. And now, and that was a 360% pump, which took 583 days to unwind. And then, so this is the 5 wave that we had back in April. This was actually the high of Bitcoin, the 73 or 74, whatever it topped out at. And then, according to the schematics here, we should be at the end of an A wave, coming down on this macro counter trend correction, which should bring us back down to the macro support line again, and prep us for the next macro bull cycle, perhaps next year, beginning next year, or mid next year at some point. So I have this. This isn't drawn to scale, but this puts it at like May of 25, or this C wave. Now, so far, we've retraced about 30% from where we peaked at, where we had the all-time high back in April. We've only gone about 30%. And so that's around the time, I think, where the B waves usually come in, around 30%, and we have this reverse correction where we have a pump, and like we see here, this B wave where it came up from, let's see if I can measure this, from, about a 45%. So 45% could bring it back up to the channel midpoint. And that would kind of be like the UTAD that I'm talking about, these UTADs, these like bull traps. But then we're coming back down, or we should come back down to mitigate the lows like we did here and create the double bottom on the macro. See the double bottom here? This would be the neckline here and then here. It's one gigantic double bottom, or Adam and Eve, as some people call them. And then we have a dual cycle here, bull and bear macro, going from support to resistance and back to resistance, blowing right through channel midpoint. And then we start again with a counter trend, which we've seen so far, where we peaked out at the all-time high here, and we've come back down. So following this kind of historical pattern, it's from here, it's to the macro trend support line is another 47%. So if we were to consummate this correction at 47%, that would put us at around 39 to 40K Bitcoin, around that price range, which is what, when we looked at the micro charts, we're getting the same from the Fibonacci's. That's what the Fibonacci's are telling us. Now, a terminal shakeout, if we were to have a terminal shakeout, like another, if we were to go beneath, say like we did here, for whatever reason, an economic recession or something with the up and coming elections, or the civil unrest, or anything that might come from the election results that could bring the stock markets down, everything down, then we could have a proper 52%, another 52% terminal shakeout, which should bring Bitcoin down to 35,000. I don't really see Bitcoin going below 35. It could though, but 35 would be, kind of pushing it. But I think a conservative would be like 40,000, $39,000 to $40,000. Let's say that Bitcoin does go down to 35,000, and then we have the beginning of the macro bull cycle, like we see here. This one was a 1,600% pump. Now we're in the macro phase. Remember, we're in this macro phase. There's 1, 2, and then the third one is coming now. When we get to the end of this correction, whenever that is. 1,600%. Let's say it's let's do a conservative. Let's just say it's a 500% pump from 35 grand. That puts Bitcoin at $175,000. Somewhere up here, somewhere in July of 2026. I mean, that's possible. That's, it's a possibility to go that high, but not before a correction. And this is what people get confused with. Traders are getting confused. And it really doesn't matter what kind of charts you have or what your numbers are showing or whatever. The name of the game is profit taking. And so these sell-offs on these counter trends are where market makers take profit. They have to take profit. Otherwise, it makes no sense to pump it up to these areas up here where the moon boys are saying that it's always going to go every month. We're always on the cusp of some macro pump that's going to bring Bitcoin into $100,000 or whatever. And that is coming 100%, but not before ample profit and liquidity has been generated. This couldn't have gone 1,600% without the COVID lows first, without the terminal shakeout. You have to have fuel to power this kind of rocket boost. Okay? And enough fuel has not been accumulated by only a 30% retracement from an all-time high. Now, the B wave is the enticement wave. The B wave, which is coming, I think it's possible that we can go back up again, but that would constitute the B wave, sort of like this one did here back in February of 20. But that would be for the purpose of attracting FOMO retail, and then they pull the floor out, and then it falls, into the terminal shakeout, and that's when you see the 50% or more. It has to retrace. These usually retrace at least 50% from the all-time high. See, this one retraced 72%. This one could retrace 50%. If it retraces 47%, it brings it down to 40K. Okay, which is totally feasible, at least wicking down, and that would set the launching pad. That would generate enough liquidity to substantiate a macro bull Elliott wave to launch from there. And this time, this wave, like this one, will blow through this channel midpoint. You would have the 1, the 2, all the way up to here. And that's where you get these $100,000 plus $200,000 Bitcoin. But first, we have to have, market makers have to take profit. See, they took profit here. They took profit here. They took profit here. And these are all over 50% retracements. That's 84%. This is 72%. This is 77%. And so far, we're only at 30%. So, this is just how the game works, guys. They're not just going to pump Bitcoin to to $200,000 from channel midpoint. It's not, and just disregard this macro correction from the counter trend and just blow through it, maybe from here go up. This is completely unsubstantiated gains. There's just not enough fuel to do that, and too much retail is holding on. This is what everyone's hoping for, and so they're not just going to make everyone rich. Usually you go against emotional sentiment. So if the media is saying that Bitcoin is bullish, then you could usually count on a sell-off. If everyone's talking doom and gloom, you could usually count on a pump. Just look what happened with the spot ETFs in the halving. The halving, everyone was talking about, and it just basically did the opposite of what the mainstream was, touting, and what your average Joe trader on TradingView was talking about in chat. So it's the same thing here. So we need to just be prepared for this sort of play out. I believe it's what's going to happen. It's just a matter of time, but we need to be patient. 100,000, 150,000, $200,000 Bitcoin is coming, but not before more sell-off. And that's what we're seeing with predominance of supply. If we go into the macro ranges here, I don't really want to go into it right now because it's going to make this video too long. But you can sort of see how the Elliott wave is playing out, and then that would bring us this double bottom here, kind of like what we saw here. The counter trend tops are the neckline for these macro bottoms on these ascending parallel channels. Okay, but we need that second bottom first, because that's what fuels the markup. You need the rocket fuel for the markup. It's got to be powered on something, and what it's powered on is liquidity. And the way they generate the liquidity is by selling high and buying again low. Okay, this is exit liquidity, and a lot of them are going to unload on this at the end of this B wave. So don't be the one buying the bag and being caught holding this bag up here as they drop back down to macro trend support line, down to the terminal shakeout area of whenever that happens in December, January, February, of whenever, because you're going to be underwater. You may not. The good news is you may not be underwater long, because these things have a tendency of taking off, blasting off. But to make it to, from this C wave, this terminal shakeout C correction, all the way up to the second buying climax on the macro, it took 594 days. So a year and a half. So anyway, you could be underwater for at least half a year if you get duped into buying the top of this B correction. So anyway, showed you all this those are my 2 cents. Let me know what you think. If you get anything out of this video, this is no nonsense crypto analysis. I tell it as it is, and hopefully you get something out of it. Like, subscribe, and leave a comment. Let me know what you think, and we'll talk again soon. All right, guys, I'm going to go and drink some more coffee and look at some more charts, and we'll talk to you soon. Be safe. Always be safe, all right? And we'll, oh yeah, let me know where you're from in the comments. And I'd like to hear that. I'd like to know where my viewers are from. All right, guys, we'll talk to you later. God bless you. Bye-bye.